And oh, happy times. It is Friday. It is Friday Fun Day. And we've got Coach Frank here to join us for our halftime report, our daily market show where we go through the markets one step at a time, charts, news, information, economic data, anything grabbing our attention, analyze it, break it down, and help you guys better run your daily routine. Welcome to our show. Welcome to our channel. By the way, if you're brand new to our channel, smash subscribe, click the bell, come back and join us on a daily basis. We do this as well as all kinds of other content all throughout our videos and our playlist. You can find a lot of great stuff. But this live show, every day the markets are live. On today's show, we're going to look at the market technically. We've been kind of fading up here towards the highs, threatening breakouts throughout the week. We're going to have Coach Matt and Coach Frank analyze all of the charts, the information. We're going to look at the sectors, take a peek at, what has happened throughout the week, some of the better gainers, anticipating next week's moves a little bit. On Fridays, we always go through with our coaches internally and do our sector rankings. We're going to start that conversation a little bit here, taking a look at the sectors and analyzing those one step at a time. We had jobs numbers. We have other economic news, but mostly I just want to bring the boys in here and have a great time and make it a great show. As always, Maddie, how are you doing first, sir?
Tim, I'm doing excellent. I'm excited to be here with the crew to break down the, relevant market activity on a daily basis.
Yeah. Frankie, how are you doing, sir?
Doing good. Great to be here. Missed the crew last week. Didn't miss you that much as I was just kind of recovering from a turkey coma. But I did think about you all as I was doing that. So it's good to be back.
Is everybody through the Thanksgiving leftovers by now? I mean, we're a week out, right? I think you probably pounded them out last weekend.
I finished mine, I guess it would have been Wednesday. Mm-hmm. So I'm free of the bird for a while.
What's your favorite use of the leftovers?
I'm a sandwich guy.
Turkey meat on,
with rolls. So I don't like sandwiches on bread. I'm weird like that. Mm-hmm. But I definitely don't like turkey sandwiches on bread. So it's got to be on rolls. It's easy. It's fast. It's not too terribly unhealthy.
I make like a KFC sadness bowl. I'm serious. I throw the turkey in with the mashed potatoes and green bean casserole and some stuffing, and I just mix it all together and I just eat that.
So if goulash is at this point considered just a sadness bowl, I got to reevaluate my life.
Oh, that's the old Pat Oswalt.
A little bit of an inside joke there, guys.
Sure. My favorite thing, Frank, and this, you tell me if this is country, old school, or just a little bit weird. I go to my mother-in-law's every year, and I demand that I get the turkey carcass. And I take the turkey carcass home without the meat's already kind of mostly picked off. There's not a lot of substance there, and I boil that sucker down and make turkey soup.
Yeah, that's a country thing. They do that in my family. I don't do it, but I have people in my family who big fans of that. So it's not just you.
Yeah.
No.
You can't convince me that soup is a meal, though. I'll die on that hill.
Listen, I was just going to let him on that hill, but now it does remind me a little bit of my grandmother.
Definitely a Grandma Esther thing. There's no question about that.
I'm just saying.
Waste not, want not, my friend. Waste not, want not. All right, let's analyze markets, guys. Here, let's get into it. Matt, let's start with the technicals here on the S&P. We've had limited news that's actually moving the market. We'll get the stimulus update, the headline. Now we'll talk jobs here in a minute. But what are you seeing on the chart?
Well, on the chart specifically, you're seeing the continuation of the breakout we saw earlier this week on Tuesday. You saw that go above that 3650 level that we've identified as the breakout channel. I've said for a very long time in the halftime report that I did not care about this wick. This wick was the vaccine Pfizer wick, right? And we've had a little bit of a interesting journey in headline news over the last 24 hours with Pfizer as well. But I did not care about that wick. That breakout was confirmed here on Tuesday, and Mark said this yesterday, and I hadn't really considered it like that, but he said this reminds him a little bit of that August type just fade market where it just fades up, fades up, fades up. And that's what this market's doing over the last few days. It's just, it doesn't have like true strength you'd want to see on that breakout in the broader market, but it is just showing significant, just fading, just up, 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 little here, little there, not showing any weakness at all. This market wants to buy. And you know, when you break down those sectors, and we've said that all week long, this market wants to buy, this market wants to buy. And when you look at the sectors today and you're coming into next week and you really have the same opinion, this market wants to buy, and we'll break that down here in a second.
Frankie, what about you? How are you interpreting this action?
I mean, it's basically like Maddie said. I mean, we're just grinding up. I mean, while you look at the S&P and it's just kind of been a slow grind, tell that to, you know, half the things in my watch list that if I blink, I miss. So it's been, you know, that type of a week. And maybe it's just who I had in my watches, I don't know, but it's been that type of a week for me, which is a good week, I guess, a good problem to have. Right now, I mean, the big thing that really stands out, we'll talk a little bit more about it when we talk sectors, but no one's buying the boring things, right? The utilities, the REITs, the you know, consumer defensive. These guys are just kind of not really contributing to. So maybe if they were, we have a little more oomph in the broad, you know, on the S&P. It doesn't really concern me. Who wants to be picking a utility stock when I've got a bunch of casino reopening plays and breakouts on, you know, industrials
and
I mean,
technology
and it's, you know, technically, you know, and so just, you know, in your head, it doesn't seem like the place to be looking to buy, right? At least to me. But then technically it kind of validates that. It's like everything, you know, looks strong, you know, in tech, in communications, in, you know, well, in chemicals. I can say materials, but not necessarily all materials, but chemicals and whatnot. So feels like that type of a market. Looks like, you know, we're getting close to Christmas. So it looks like the good chance that we are getting Santa to show up to the market this year.
And to quickly go on what Frank was talking about, when you look at staples here, right, just kind of stuck in the mud, not doing much of anything. When you're looking at real estate here, just stuck in the mud, not doing much of anything. When you're looking at utilities, you know, I'll just tell you my note I wrote down on utilities. Utilities is a complete stay away because it's boring. And that's utilities here, right? Nobody's looking at utilities right now. When you're looking at, you know, healthcare, just kind of in that fake grind, not really a lot of activity, but now you're looking at discretionary, you know, breakout channel above 160. When you're looking at technologies had a pretty decent week, you know, threatening that breakout as well. Industrials, bullish retracement, hit the 9 EMA, confirmed, really talking about confirmation today. Finance broke out, continuation. Energy has been the best performing sector over the last 3 months, but really kind of over that last 1 month, that momentum continued. It got its first test, right? It got its first real test here, and it stuck the landing. It did. Stuck the landing. Stuck the landing. And what are we doing? We're threatening that breakout. So a lot, we talked about Chevron yesterday in that capacity. And what do we see Chevron do today? Stuck the landing like energy, confirmed here today. So, you know, there's, and Frank talked about basic materials. You know, it's been a mixed bag in basic materials, but you got to be liking that breakout, especially some of the strength in materials. Copper's been good, and the chemical company's been really good there too. So I think it's been a fantastic week in the market, but I think next week is setting up to be even a better week, quite frankly.
Yeah, I mean, technically, I agree. I mean, technically,
and that's what I'm talking about is technically, because we all know the landmines that can occur.
Well, listen, I was telling Tim in that production, this is what I'm really, the newsy times is when I'm really glad I'm not a newsy guy, right? Because, you know, I just eat what I'm fed.
Well, okay. Well, speaking of those newsy times, right? You think about just Pfizer over the last 24 hours, guys, and you know, yesterday morning, the market bought up the Pfizer news that on positive vaccine news. Later on in the day, 6 hours later, the market sold on, you know, the Pfizer news that was not accurate. And then this morning, they bought up the reclarification of the headline. And it's almost like nobody actually reads anything anymore, and they just focus on headlines. And like, okay, you know, headline this, ooh, buy. Headline that, ooh, sell. Headline reclassification of the original headline, oh, buy. It's absolutely just foolish, but it is the world we live in when it comes to the news.
Well, and that Pfizer thing was kind of silly. Obviously, just in a 24-hour window, we had reactions to it in so many different ways. And Matt, it wasn't different information; they just weren't processing it correctly. And now even here this morning, Pfizer was moving a little bit. But you're right, though. I think people are just quickly reading headlines, not really digging into it, because Pfizer gave us that information on November 9th.
Guys,
So
that should tell you a little bit about the depth of our understanding of things in the financial markets. It's just headlines.
Let's go back on the S&P for a minute. I do want to do some analysis on sectors here in a few minutes as well, where we look at some of the components of these sectors, kind of have a conversation about it. There was some jobs data that came out this morning, Matt, and one of the first questions I asked you when we started talking is, did the market care about it? Did it move on it? We saw the unemployment rate come down 6.7% from 6.9. There was mixed information in the jobs report. They only added 245,000 jobs instead of like the 450 or whatever the number was that they were expecting. So you had some mixed information. Did the market care about it, Matt?
Tim, my response is very simple. We cover market relevant news on this program. And quite frankly, and I said this a few months ago, this market has not cared about labor numbers, and it still continues to not care about labor numbers. And I don't care what you read in the headlines today, this market has not cared about labor market numbers. And just to kind of understand what I'm talking about, I remember back in the day when we were learning how pricing in works, right? And you have leading indicators that price things in, and you have lagging indicators that respond to price. And when you're talking about leading indicators, you're talking about economic reports, you're talking about earnings reports, you're talking about those types of scenarios that I talk quite a bit about on the halftime report. And those leading indicators historically take time to price in to certain things. And so when you're dealing back in the 1980s, an economic report might take days to price in. When you're talking about, the boom in technology in the 1990s and into the 2000s, when you and I and Frank started trading in the mid 2000s, these types of economic reports would take time to price in. They certainly wouldn't take as much time as it was in the 80s, but they would still take hours to days to really kind of price in because of the speed of information. And over time, that has certainly increased. There's no doubt about that. But when you're looking at the labor numbers today and the impact on the labor numbers had on the market today, you can't look at it on an hourly chart. You can't look at it on a 30-minute chart. You can't look at it on a 15-minute chart. You have to come all the way down to a 1-minute chart to see the impact of the number one labor market report to the stock market.
This is the monthly jobs report.
This is the monthly jobs report. And you have it priced in a 1-minute chart before the market behaves completely rational and normal and has stopped thinking about it. That's the importance of the labor market numbers. Now, is there going to be times where it's more important to the market than a 1-minute chart? Of course it is. But as of right now, this market has understood that those labor numbers have been broken and disconnected from any semblance of economic reality for months now. So the labor market numbers, are they relevant? Yes. How important? I think the data speaks for itself.
Well, I think really probably the only thing it really does is gives people like Chuck Schumer and Nancy Pelosi and McConnell to bluster about headlines about the need for this or that or the other thing in those conversations. But I don't even think it affects those conversations
for months
frankly.
now.
Yeah.
So the labor.
Yeah.
Sorry about that.
No problem. But we did get updated numbers, mixed report. Market didn't really respond to it. In fact, it took whatever punch that was, Matt, little 1-minute candle sell off, and then went right back up. And here we are about 0.5% to 7.7% up across.
And think about that, Jim. A 1-minute sell off on a headline that read the labor market numbers missed by over 235,000 jobs. Think about that. It's insanity.
It's cuckoo for Cocoa Puffs. There's no question. Frankie, how are you seeing the relative strength or weakness across any of these different indexes? I know, we've been looking at, and I asked Matt the same question throughout the week, the S&P, the NASDAQ, the Russell, and the Dow. Do you see one of them as the strongest? Do you favor one over the other? How are you reading them?
Not really, to be honest with you. I mean, they're all I mean, looking about as nice as you can look, right? For a little while, it was easy to kind of let, NASDAQ kind of do its little dance, but it's kind of gotten back into the swing of things. To be quite honest, I don't really have a strong preference either way. I wouldn't fight anybody regardless of their rankings, of where they, how they wanted to rank those 4
Frankie,
indexes.
can I step in on that too?
Sure.
Frank loves breakouts, right?
I do.
He doesn't discriminate between the type of breakout.
Nope.
Correct? Okay. So you have difference in pattern coming into the breakout, but they're all breakouts, right? When you're looking at the type of breakout from a top-down perspective, you do look at the Russell 2000 here as a leader in the market. Absolutely. It's been a leader in the market. We talked about it being a leader in the market all week long. We love the defensive nature of this. We've called it 1A in the market ever since really kind of the last 2-3 weeks post-election analysis. It really fits the theme that developed in the market post-election as well. And it is not surprising at all to see the Russell 2000 breaking out and up about 2% today.
No, not at all. I mean, just beautiful breaks, right? I mean,
beautiful
that's
breaks.
Nice movement, beautiful breaks. I mean, there's a breakout for every trader out there right now.
There
right?
really is. And early in the pre-production show, Coach Tim was like, "Hey, Frankie, do you have what picks do you got today?" And Frank's like, "I got a whole lot of breakouts that look a whole lot of similar." So
it is. I mean, that was the story for sure.
Yeah,
I enjoy that problem though. If I get 10 candidates that all look really close and I get a split hairs so I can make my pick, I enjoy that. I think it's a good problem to have. Having a lot of qualified potential candidates, even if they're in a similar pattern.
I do as well, but the Russell 2000 has been a leader. It's obviously breaking out today with some strength there. The Dow Jones kind of hovering right underneath that breakout channel. The S&P has already broken out. The NASDAQ's trying to fight right now, multiple different breakouts. Ultimately, that all-time high is the one it's fighting right now. But keep an eye on the Dow Jones here. The industrial sector in the S&P 500 tested that 9 EMA, confirmed coming back up, hovering right underneath that breakout channel as well. And so, I'm not going to sleep on say the Dow that's kind of been asleep underneath resistance a little bit, but look at Honeywell here. We talked about this potential breakout here on Honeywell. We got the breakout here. You get some movement coming into the Dow Jones, and you are seeing that initially here today as well. You could, like we talked about that trade on Honeywell, that's looking like a pretty decent trade setting up.
Yeah.
I love that breakout. And obviously when we did our Dow draft earlier in the week, I was lucky enough to get Honeywell out, but Cat as well is breaking out here today. When we look at industrials, I think we're going to see some nice, potential.
Cat was my pick. So
yeah.
I was trying to give you a little bit of love
that's
there.
why I threw Cat at you, dude. I can't just take the Honeywell credit.
And I got 3M, right? That's who I
you
got.
You did get 3M.
I feel like I got cheated a little bit.
Well, in the short term, right now, we'll see how it plays out all of next year. All right. One thing I do want to do real quick here is flash through commodities, currencies, so we can get into the conversation about sectors and start looking at companies. There's not a lot of, craziness in those commodities here today, Matt. So let's do a quick run through if we can. Let's start with gold. We'll come back. I want to end on crude oil because I think there might be a little bit longer conversation there. What are you seeing on gold here?
We talked about gold being in the short-term bearish retracement, and where you have mixed data from a multiple time frame perspective, you typically do have a little bit of an extended battle play out to see who the clear winner is from a trend perspective. And that battle's been playing out ever since it got into that 200-day moving average, and we broke that zone down last week as gold was approaching that. Just as a reminder of the power of that zone, it's not just that finite line you see on the chart. You look at the left of the chart and you have that major zone of previous resistance before you went parabolic here in July and August of the year. And so you have that big zone that you have that battle. Now you see this as a short-term downtrend with the bearish retracement. Yesterday I talked about how because of this pattern, I do expect a little bit of a double dip coming into the support level. That would be ultimately where you would think about that reemergent to the buying, is that double dip test of support, seeing support hold, letting it hold between that 200-day moving average and that 1780 level. And what couples that analysis on gold is certainly the dollar here. The dollar is very overextended in the short term, and even though we're seeing trend momentum pick up with the volatile breakdown of that major support level, with an expectation ultimately that it will get down into the 24 range, that's not going to happen in a week. That's not going to happen in one movement to the downside, not on a currency like that. When you're breaking it down on the daily chart, you see the dollar very overextended to the downside. Obviously, the gap down yesterday with the positive news on I say positive news on the Eurozone because they don't have to print as much money and go into as much debt. But the positive news for the euro specifically in terms of that drove the euro up, the dollar down a little bit more extended than it normally would be. Now you're seeing this as overextended. You expect a little bit of a snapback retracement coming back in, testing that decreasing 9 EMA. And while that occurs, the most likely destination for gold is coming back down into these support levels. That's where we're looking at that buying opportunity on gold, is if these support levels hold on the retest as the dollar goes back up and tests that bearish retracement, Tim.
Mm-hmm. And then last one on oil here, if we can. I want to get Frank's take specifically on oil. I know that forever, Frank, it was always, do you see anything interesting? And it was a quick no, quick no, quick no. Over the last couple of weeks, we've seen positive development. Matt broke down the chart day by day as this thing was developing that bull flag up here. It's even threatening a breakout. Frank, do you see anything interesting? And the first part question, two-part question though, if there is something interesting, how do you use the information in your actual decision-making?
Yeah, I mean, it is interesting for the first time in a while, right? We actually did break out. We have broke resistance for the first time in forever. We're now a couple weeks into the breakout, showing a little bit of strength, decent little move this, today here. So yeah, it's there, right? We've talked about that a lot. It's a breakout. I'll always call it a breakout. That doesn't mean I'm going to trade it, right? And that's still where I am with crude. I'll maintain what I've been maintaining since it really kind of started to happen. And I'm looking at equities in the energy space. That is how I am looking and have been playing over in energy / crude. I'm not interested in trading crude itself. Right now, I get it. The breakout's there. I wouldn't bet against it, right? But I still maintain working with the equities is where my head is.
Mm-hmm. And that's exactly where my head was, like on that Chevron pullback that we were identifying the last few days, Matt, that stuck around that 90, and we got confirmation here today. It might give me more confidence to play that. We did get some news around OPEC here today. They had a 5-day meeting where they were discussing production cuts. They actually did decide that 500,000 barrel a day production is going to be added to the market next month. So they're going to increase a little bit of that supply side, and crude oil's up even on that news. So it doesn't really get phased by that. Matt, what's your read on oil right now, if any?
I got the same philosophy as Frank. I'm very hesitant. The breakout's there, you see it, but then I think you see what the market's doing today with crude, and it's kind of showing you the exact same concern we all have with crude. Really trusting that breakout a little bit. You see the test up, come right back down into the breakout channel. For people that love oil, trade oil, and have waited for oil to come back, this is what you've wanted to see. It hasn't changed. You like the analysis. It's fairly consistent. Just in the back of our heads, we're all looking back to these moments and being like, yeah, I've had those philosophies before, but you see this trend, the consistency of it. Oil is back to a certain degree. I'm still hesitant. I'm there with Frank. I like breakouts a little bit more in oil, but more than anything, it gives me confidence in say that Chevron trade or another trade in the energy space to see that momentum continuing. Then it does spark my desire to come in here and dance in the crude market right now.
Last quick one on Bitcoin. Then I want to do some sector analysis. Then we got individual charts here in just a few minutes as well. Frankie, Bitcoin's been really interesting the last 4 months or so as we've seen these breakouts. We've been talking about it. It's caught the consciousness of the markets. From last time we had you on the show, though, we had the Thanksgiving holiday with the red candle. Now it's developing a consolidation. Simple question. Does the volatility here, change the way you would analyze this chart?
No, I think this is exactly what you wanted, and Matt and I were joking, was it last week when I can't remember when it was, last Wednesday or something, about the breakout and, consolidation. No surprise, Matt and I want a consolidation breakout, right? So,
Shocker.
that's not a surprise to anybody who has ever met us. We're finally getting it. I told Matt not to, you might not get it, but hey, it looks like, we're now a week in to getting that. I think you said it yesterday, Maddie, on the halftime report while I was lurking. You would like it to consolidate there for as long as possible, right? A month from now, break
A
out.
month,
And
2 months, 6 months, 12 months. I don't care. Give me as long as you can. Give me as long as it's playing defense, right? As long as it's playing
keep
defense.
playing that defense and run and I think that's probably an unreasonable hope.
It's completely unreasonable.
Well, and one thing that I think you'd like to see, all things being equal, is it to continue to hold that 9, that rising 9, and let that ultimately springboard us, which obviously is going to happen well before a month from now, right? If we get that, we're probably more looking at next week.
Here in a week from now, it's going to get to the point where it's like you're going to break out one way or the other. Right.
Yeah, you're gonna either roll a little bit or you're gonna break out, and so
that pinch is going to get real tight against that 9 EMA is what's going to happen.
Exactly, and I think that's your ideal scenario here, is where that takes us into Tuesday, Wednesday of next week, and kind of acts as the springboard to push us through on the break itself. The break's legit, right? I mean, this thing's had a ton of momentum. I'm not going to be the guy that says, it's over. Why would I say that? So certainly, I think if you're in it, you've been enjoying just day after day of greatness, you're probably saying, hey, get back to normal Bitcoin. But if you're looking for an entry, this is, the type of thing I think that you wanted to see.
Yeah. Yeah. And I don't know if we're going to get that 12-month consolidation there, Maddie. I mean,
listen, I said it was completely, it's unreasonable to expect Bitcoin. And I say that tongue in cheek to a certain extent, obviously. I think Frank's right. You're looking at next week as this break-in.
Yep. All right, guys. From a big picture perspective, the next thing I do want to do is kind of take a look at those sectors. Matt, you did flash through them one at a time. I know that the conversation we have a lot on a Friday is, where to rank things, how to, assess them and whatnot. One of the questions that Matt threw out there earlier when we were having a discussion is, what are you anticipating in the sectors? Which ones are you watching and waiting for? And are there individual, kind of sectors that you're going to focus on a little bit more than others? Matt, go ahead and why don't you just take us through whichever ones you actually want to talk about. We can dive into them a little bit more. Obviously, utilities being boring, we don't have as much of a need to have a discussion on that as maybe say the technology sector. But why don't we start maybe with materials?
Oh, come on. You don't want to start with the one sector that's actually breaking down in the market?
I don't care.
No. Wait a second. Hold on. Nobody wants to start with shorting a utility stock?
Anybody?
Anybody?
Give me the REITs.
Anybody?
I'm not that desperate for a bear. Any bearish notions have been whipped out of me, apparently.
I haven't been that excited for bears, and who ever gets excited for shorting a utility stock? So, but every single Friday, guys, for those of you that are new to Tackle, for our veterans out there, #Team Tackle, you guys know this full well, but every Friday, all the coaches of tackle trading get together and we have discussions over the market. We rank the markets from a biased perspective. For those of you who are familiar with tackle trading, you can see that nice little scoreboard here. And while I'm on that scoreboard, I gotta show our resident coach Christian Sisson. We just started our Facebook tackle trading group. I'll post the link here. I just literally did it last night. So we just barely started this. But you see that football field? That's how we rank them, right? The closer you get to the touchdown over here, that's the more bullish you are. The closer you get touchdown over here, the more bearish you are. That's that. I just wanted to show that picture because I love that picture so
That's cool.
much.
That's cool. Yeah, it is really cool looking.
That picture. But this is the football field we rank the markets on traditionally, and as you can see, slightly bullish, +1, slight +2 bullish. We very rarely put the market into +3 territory or -3 territory because we don't think radicals in the market last very often in the stock market. Individual stocks, individual industries can certainly get get there, but it's really
Mhm.
tough for the broad market to get there is
Right.
basically the point. And so and basically how we rank these is obviously the further right you get, the more bullish you are. And at tackle trading, that's very important, that +2 versus +1, because that goes to delta weighting and beta weighting portfolios. But obviously for the layman out there, the closer you get to the touchdown, the more bullish we are on that area of the market in a certain amount of terms. So looking at this is kind of where we start from with last week. And every week we have a discussion on the individual industries, the stocks. We break down all the charts. We look at, the underbelly of the market, not just the broad market in terms of our rankings. But, coming into the week, basic materials and energy were two of our, higher ranked areas of the market from a trend and pattern perspective. We have yet to break out in the basic materials space, but really nothing has transpired this week. You're still looking at this as a potential breakout. I doubt the rankings get updated at all when you haven't broke out there. Looking at the industrial space, another +20 ranking. It got that first test of that 9 EMA. We were coming into that test this week. We all like this area of the market, the industrial space. It fits the theme that has developed in the marketplace. You see that test of that 9 EMA. It stuck the landing. Now you're looking at that continuation of that bull flag pattern in the industrial space. And, you take a look at everything besides 3M in industrial, Frankie, and it looks pretty good right now.
Thank you.
I just had to. But looking at a couple areas of the market that are very, very interesting for the week that I think is going to have some thorough discussions on is a couple of these areas of the market that are threatening fairly significant breakouts. And you're looking at, we talked all week long, we've talked the last couple of weeks about the difficult nature of calling the official breakout in technology, because when you're looking at this area of the market post-election, it's been a laggard against industrials, energy, basic materials, finance, those types of plays. It's played a little bit of catch up in just recent memory over the last week or so. But as you're fighting for this breakout, the reason I call this a little bit difficult to actually state technical confirmation is when you break out here, you look to the left of the chart, you got some trash over here you got to worry about. Breaks up over here, you got some trash over here you got to worry about a little bit. But as of right now, I'm looking at this as ultimately setting up in a high base scenario, threatening this breakout of that 125, looking at that as potential continuation. And if we start getting some true price action in the tech space, this is an area of the market that can absolutely fly. It can catch up. It can catch up in a blink of the eye. There's no doubt about that. So in looking at this, you got to be interested in technology as it's starting to show a little bit of strength, showing some consolidation, high base type mechanics, hovering that breakout channel. And then this, you obviously got to be concerned a little bit about this. But once you're above all this other nonsense over here, I think you do have a little bit of clear selling here. So keep an eye on the technology space. To go in line with that, obviously discretionary has been
Stay
in
on
this.
tech for a sec. Stay
Yeah.
on tech for a sec. Come back to it. What's interesting for me in this one, and I love the analysis and the breakdown. As it's been pushing higher to threaten it, the components, Matt, that are actually getting us there are like the applied materials, microns, the chip sector.
Oh yeah, if you look at
like that.
SMH for
Yeah.
a second, Matt, that'll do it.
That-
Sorry,
that-
Tim.
No, that's exactly right.
That's it.
It's been running. And what's not participated yet in all of this is the Apple, Microsoft type of trades. Apple's looking productive. It's getting there. It's coming back up. It's not like it's been running here. The fact that the bigger names, Matt, were not really participating in the recent movement, does that give you more optimism for a breakout? Does that give you more trepidation about a breakout? Like, how do you read that?
Well, they haven't been participating, but it's not exactly like Apple's been weak.
Mm-hmm.
Right. I mean, so it would be a little bit different for me if Apple was in a bearish downtrend and threatening to break support, and you'd be like, well, we got to be a little bit concerned about how Apple might, the performance on Apple and how it's weighted in the market, it dragging down the rest of the good times in the market, right? I would be a little bit more concerned about that. Apple, however, is still in a bullish uptrend in the short term. It's consolidation over the intermediate trend, and you're threatening the same degree of breakouts in Apple that you do have in the technology space. So this is one of those components that we know how fast Apple can fly here. And so, yes, this is certainly can play catch up, and you're seeing significant strength, obviously, in semiconductors. Maybe you do see a little bit of consolidation in energy over the course of the next couple of weeks while we see catch up in the other areas of the market. I don't know about that. Nobody does. What we know for a fact is, even though Apple has not been participating to the degree that the market has, it has not showed weakness.
Right.
Mm-hmm.
They've not been hurting, just not been helping, right?
Yeah.
Mm-hmm. And that's kind of the way you're seeing as well, Frank.
Yeah.
On that component. All right, very cool. Yeah, I'm anticipating some of those moves in those stocks, so I'm watching for them quite a bit. What else? What other sectors are grabbing your attention?
You know, discretionary here, the consolidation that discretionary is having right underneath that 159 breakout, it has been long enough that now you can reasonably expect that breakout to start happening. And I'm certain as we go through those scatter reports today, I haven't technically done my scanning in the individual components yet, but I'm certain there's going to be a plethora of different breakouts in the discretionary space that we can pick from. It's been in the cooker. It's had enough time to cook. Let's get some movement there in discretionary is kind of what I'm anticipating coming into next week. The industrial breakout, very similar to what we're seeing in the rest in basic materials as well, threatening that first retest. We saw it in industrials as well, basic materials and industrial as well. Mm-hmm. You saw that retest of that 9 EMA, stuck the landing. Now we're threatening breakouts there as well. The question that I have specifically on two sectors, that one, I just have a hard time believing in at any point in human history, is the financial space. But you're seeing a legitimate breakout in the financial space right now. Yeah, I think it's easily. I think it's reasonable to expect price appreciation here on this breakout. I think that's absolutely reasonable. And so there's going to be some financial picks out there in the market as well. And then ultimately, and I honestly think the discussion that we're going to have the most on is energy here again. You know, it dominated the time allocation last week when we were breaking down the markets. I think it's going to do the same thing this week. All of us were anticipating a pullback in energy last week, and we got it. The question was, and I'll just tell you, I said this all week long, every single coach was looking at a pullback in energy to play it. They got it. It stuck the landing. And I think for a lot of coaches at tackle, sticking that landing on this test, this real first test, there's no test of support here. There's no test of support here. This is a test of support. This is that Marty the elephant coming down on the tramp and seeing if he's going to break that tramp or if he's going to stick the landing. Marty stuck the landing here. And now what I want to know from the coaches was that significant enough for you to start opening up that risk graph and releasing the Kraken a little bit here in the energy space? Because I know all of us have been a little bit hesitant.
Mm-hmm. I took a trade on Chevron yesterday, so I mean,
I
did enter that.
Yeah, I know that. Yep. I'm talking more about last week coming into this week. Mm-hmm. I know you nailed the trade on Chevron. I know the other coaches are looking at it. I know lots in tackle trading are. Now they got it. Does that increase their confidence moving forward to start think about energy as a potential breakout candidate?
What about you, Frankie?
I think it already has happened. So I'm completely on board personally. So the big thing for me, and I think we talked about it briefly a couple of weeks ago, was that first test of the falling 200 on XLE, but more importantly than that, on so many of the stocks within the space.
So many.
That's one of my favorite reversal momentum, whatever you want to call it, type of patterns. First failure at the 200, pull back, create a higher low, and then push through the next time around. That shows me, it makes me believe there's a lot of confidence already. So I'm fairly confident in it going into the upcoming week. I will definitely argue for a decent upgrade in energy.
It's one of the beautiful things when you do top-down analysis and scanning that I love is that you start to see patterns within the sectors that are developing like that. And there were so many companies, like you mentioned, Frank, that had that almost exact same pattern. I mean, Matt just flashed through a couple here. Look at Valero, VLO, same kind of pattern. We had that breakout, pull back into the 200 period moving average, stuck it. Now we're running.
Oak a couple of weeks ago, OKE.
Go ahead, Matt.
Yeah.
Yeah.
Oh no, I was laughing because every time somebody brings up a stock where they don't know if the person running the screen knows the symbol,
I know.
and I wanted to be like, Tim, did you really think I didn't know Valero symbol?
You got to wonder sometimes.
You know, I know, I get it, I get it. You always have to, because we all have brain farts. There's no doubt about it. There's no doubt about that.
Little
And
side seat driving over here.
I will tell you right now, primarily I do drive in the halftime report. And I just want to say thank you for always doing that, because every now and then you have brain farts.
Yeah.
I'm a side seat driver. It's why my wife does not like driving around with me. By the way,
Tim, I can see.
We're going to the local Walmart, and Tim's like, turn right up there.
Watch out for that truck. It's stopped. Little. Absolutely. But anyway, some more on this one here. We had ConocoPhillips, COP. I mean, that breakout pullback into the rising, falling 200, rising trend that's developing. Phillips 66 had the same thing. What I love about it, the reason I want to talk about that for a second is that's where you get to make those hair splitting decisions, Frank, where you're like, I like this one a little bit better than that one based on the overall trend, top down analysis. I know this pattern is something I'm interested in. And then as you do your scanning, then you can start to make your individual selections.
Exactly. And I usually personally, especially in energy, kind of lean towards the more small mid cap ish range as opposed to the big chevrons of the world. Obviously, I'm not opposed to trading Chevron, but I like Oak, right? Compared to Chevron a little bit. I like MMP, that's on there, so I tend to shy towards those kind of characters for whatever reason.
Mm-hmm.
Well, I think we all have our favorites, but I also want to, in terms of when you're looking at initial recoveries in an entire space of the market, you're looking at energy here, and to just show the 3-year weekly chart, that's what energy has been doing. So when you're talking about a recovery, not just post-pandemic, obviously, but when we're talking about a recovery from something that has been a very, very long time in the making here, you initially see this, not to the degree that we do, but you initially do see a surge coming off a reversal pattern. Again, this is kind of historical in nature.
Right.
But my point is, initially, most of the market's going to look just like this, right? Because Tim, you have your favorite, and Frank, you have your favorite, and I have my favorite, and Goldman has theirs, and JP Morgan has theirs, and every trader and institution and hedge fund around the world has theirs. So, but what happens is you initially see the entire market perform very similar to the market, but then much like when the market starts doing this, certain sectors start to separate. Well, in terms of the stocks within a sector, once this occurs and kind of that euphoria subsides, you start to see certain stocks separate themselves. And
Absolutely.
So the discussion that you guys are having right now is just a microcosm of the discussion that people are having around the world in the energy space right now. And that's the discussion I'm looking forward to having with the coaches later on today.
Mm-hmm. Absolutely. And I think that same conversation can apply to what you talked about with finance. We're all going to have our favorites, the whole thing. It's going to be a fun conversation when we have our SRP meeting later.
When we talk about finance, not all of us are going to have our favorites.
Dude, there's a couple, there's a couple of good ones in there. I know it's
not all of us are going to have.
Sometimes you got to hold your nose and still just click that button,
Not everybody.
It is what it is. Frankie, I know you also had some charts. We can get to those here in a minute. Anything else on sectors, Matt, that you want to talk about here? We're good. Let's do it right now. Let's get into the charts. By the way, if you're watching our channel right now, it is Friday, 12/4. We're having some fun talking markets, looking at charts. Appreciate everybody out there. Hashtag Team Tackle is our official hashtag, and I love the conversation I'm seeing in the chat here today. It's been really rock solid for quite some time, though. I appreciate you guys out there. If you're brand new to our channel, make sure you give us that subscribe, click the bell, come back and join us every day. And guys, one thing I always ask for, those thumbs up. Let's get those likes up so we can get the word out and get the analytics up on Tackle Trading's YouTube channel, get more people in here so they can get this kind of analysis and help them with their stuff. All right, Frankie, you're up, my friend. Let's go charts.
All right, let's do it. Let's start with FedEx. Let's start with FedEx. I mean, it's very breakouty this week, right? There's not very many retracements, and the few that there are a little deeper than I like personally. But I'm well documented. I like shallow retracements. Deep ones are not my cup of tea. So there's a lot of breakout plays out there. You've got FedEx here, Tim. Probably, I think you could argue. I know we still have a little bit of time left, so anything can happen. But assuming we were to close as we are right now on FedEx, would you call that confirmation?
Yeah. If you're closing above that pivot, I mean, here's the thing. I would call it intraday confirmation here. I'm looking at my chart on my side, but I would probably still want to see this thing clip 300. So there would be a discussion here for me because of the significance of the round number, and how I would probably play this FedEx. Yeah.
There's no discussion in my opinion, quite frankly, because with an ATR of 8 and in a zone of 8, basically you're within the zone of the breakout. You can easily make the argument it has to reclaim 300 before you ultimately break out.
Yeah, well, and it's like what, like $1 above today's high, which would be,
I mean,
so I mean, it's, I think
if we're talking a $20 stock, it's a different philosophy.
Sure. If that's 30 we're looking at, we know it's going there, right, Maddie?
Yeah, so yes. But that was a breakout at 29 with a target of 30. Frank would guarantee Frank's all over that.
Yeah, we're already in it. But it looks like we're going to
get just thinking about that for a second, because that's an interesting thought. If this was a $30 stock, we wouldn't even think about this discussion. We'd just wait for 30, right? Because it would be only 30 cents from where it is right now.
Right.
But
right.
It's just $3 on a $300 stock, for some reason, my brain thinks of it differently for a second. You got to catch yourself.
To wait that long. Yeah. It's easy to fall for the numbers, right? The numbers mess with our heads. It's always a battle we have as traders.
Sure.
Doing the right thing versus numbers, right? Here's another interesting one that's probably not a next week trade, but I thought it was worth throwing into a watch list, and that's Fastenal, Maddie, FAST. I do it too. It's not just Tim.
we all do it. Everything. It's a habit now more than anything.
So exactly. Back into resistance, right? We tested it a few times. We're a ways away, and I guess maybe a more aggressive trader than me might say, try to ride it back to resistance. I think at this point in time, you're kind of hoping this takes a couple of weeks and turns into a little bit of a cup and handle break above that resistance point. Personally, assuming we got that, because I know, Matt, you're not buying it if it breaks out on Tuesday. I know you well enough to know that that won't happen. But assuming we had some decent development, say over the next week and a half or so, could that potentially be a breakout you'd be interested in looking at?
Yeah, I think, but for me, Frankie, I would see Fastenal more on the weekly chart with the potential breakout here, and I like it more from a position style on that weekly chart than I do on the daily chart.
So it's fast. They move quick, right? The name says they do.
They're fast. They're fast. They move quick. I love that. They do move faster than market. It can move. It can move, no doubt. But I just think that with the consolidation, really since July of this year, that neutrality creates a fairly significant advantage to position traders.
I could see that
over say the initial swing trade.
I could see that. We'll revisit this one here in the next week or two if we get there. A few things that are more potentially actionable early in the week than because I don't think Fastenal for me is actionable early in the week one way or the other. Let's start with PayX.
I was looking at Paychex just literally right now. So
Paychex is really interesting to me because of where it's doing what it's doing. Right. It broke out on that gap. It was able to hold that. We've kind of ground, and this is definitely the pattern right in the market right now. This is definitely the pattern, but it's where we are on the chart that kind of drew my attention to PayX over some of maybe the other candidates that were, similar looking.
I really like the consolidation nature of this. The question I would have for you, Matt, is that wick and that tail. This is where I would lean on one of my trading buddies or something like that and say, okay, let me think through this, right? Because that's what grabbed my attention. And if that's Pfizer vaccine day, then I can process that.
That's see that wick? Hold on, I got to go down to the 1 hour chart. That wick is all non-market activity. Okay. That is the opening price on Pfizer news. This is the real analysis, which means ultimately you can trigger above 94 without caring about 94, 95 too much, because you know what they say, Frankie, breakouts in 94 always go to 100.
94% of the time.
94% of the time.
94% of the time.
94% of the
And
time.
guys, like CNBC taught me today, that's science.
It was pretty rough when I first jumped into Zoom to join the guys today. That's what I walked into, is two guys fighting on CNBC about, I didn't know what they were fighting about. They were really going at it though.
Frankie, you guys, I'm gonna put it on Twitter. Team Tackle, I can't play it here because it's CNBC. I'm gonna play the video that I was watching earlier today on Twitter, and I'll put it on Facebook as well if I can find the raw video. I initially thought they were yelling at each other because I just watched the Twitter video, the little 2-minute cut up. I initially thought they were screaming and yelling at each other over industry categorization within a sector, which is a very heated discussion that many traders always have behind the scenes. And I'm like, wow, they're saying the quiet part out loud. This is kind of funny. And they weren't talking about that. So I was like, okay.
Yeah,
right.
it was interesting.
I can't tell you how quickly I stopped watching the video once I did figure out what they were yelling at each other about.
Yeah,
they were passionate. So we'll leave it at that. A couple other candidates that look very, very similar and that kind of jumped out to me. One is IR. Same type of a deal.
Yeah.
And what everybody here knows me, and if you don't, nice to meet you. Welcome to Team Tackle. Great to have you here. I want real clean entries, right? I'm that's what I try to bring, every day here, and on Fridays and over to Twitter during the week. I think this has a pretty clean entry point, at least what I would consider that. So I guess maybe my eyes are my own, but very clear top. And we don't have to have the debate on the wick on this one, right, Maddie? Because we've tested it a couple of times. We break that, we get it all, right? So
you break that, you get it all. And where is all? I would say 48.
Yeah, let's see here.
Maybe 50. Maybe 50.
So yeah. I
think
48. I think 48 is, yeah. 50 might be a little optimist. Hey, in this market, doesn't hurt to be an optimist, right? Letting these things ride. But I would say 48 is a more reasonable target. 50
I just wanted to make
more.
sure that new people that tackle trading knew what get it all means. Our first target. That's what get it all means.
So, but I like where that set up personally. You've got HCA.
Well, let me stay on this one.
Oh yeah, go right ahead.
Here's
Tim.
my thought on IR. It would be one of those stocks, Frank, and I would almost guarantee, I know my response to this would be instant. Let's move it to the second round. We'll look at a lot like this because there's so many in the market like this. Would you agree?
It would be broken down against other.
It would.
We'd have to compare it and contrast it.
And when we're talking on Fridays for the halftime report, I've already done that, right? Because these are my watch list candidates. So I've already kind of done the risk to reward, and I've kind of compared them versus how easy it'd be to get in and all of that fun stuff. So mine always move, on in my own head. But yeah, we'll have some that we have to debate, right? I mean, we'll have a few that look like this though in different spaces. I don't doubt that for 1 second. HCA, Tim, that's a good point. HCA, very, very similar. Kind of like Paychex, though, we'd broken out of some all-time highs and been kind of consolidating that area. I believe we had these on the report last week and are finally triggering here today.
That is a confirmation trigger, no doubt. Continuation from the high. That's standard textbook on HCA.
Yeah. And this is a good reminder on your breakouts. And I know most of the team probably does a great job on this, but we're all human. We can all forget about our breakouts because they didn't break out by Tuesday, right?
Yeah.
And so what are we doing with this character? They'll break when they're ready, right? And our job really isn't to make it break. Yeah, just when they're ready to roll, they're ready to roll. Our job isn't to make them break out. It's to be ready if and when they do, right?
I can't choose when Bitcoin breaks 20K.
You can't.
You can just be around when it does.
Exactly. Now, I don't think Noah's in the chat today, which is unfortunately.
I would assume not, since we haven't seen any snarky.
No, I've seen no snarky comments. But I've got Archer Daniels, ADM, a little bit of a triangle. I know this isn't a MAT chart, but I know my Noah. got a little bit of a triangle developing here on ADM. So Noah, I'll bring this back up to you later today if you don't get in here before too late.
I will tell you, not my cup of tea, Frankie.
Yeah, I know. Yeah, I know that you're not.
You gotta like this increasing support level. Look at the test under the 50. Look at the test at 50. Look at the test at the 20. Look at that increasing support level. Look at the horizontal resistance. You got the triangle coming down. That would equate to that breakout of 50.75. And that would see first target at 52, secondary target with momentum would probably be in the 54 to 55 range.
Yeah. So now I'm trying to multitask and talk to Cutzilla in the chat and you at the same time.
Let me ask you, Matt, because my first thought on ADM when I saw this daily chart is I got to see the weekly. When you see triangles like that, don't you want to instantly go back and look?
Triangles are any degree of like consolidation neutrality over time as well, right? And so basically when you look at that, you see the triangle here that Frank's talking about. You see that triangle there. So basically the weekly chart just confirms what I initially said on the breakout. So it confirms the initial technical analysis on the daily chart.
We do have some all-time highs in around 53.50 going back into like 14 and 15 where it was a double top, but there's room between here and there. I think you can map something out if this is your kind of a trading pattern.
Listen, if a $3 target on a $50 stock doesn't whet your appetite, then you might want to find a different market.
There you go. There you go.
Yeah.
So yeah. Let's see here. A couple more. I have another breakout candidate in Darling, DAR. I know we've looked at these characters a few times, really since the beginning of the halftime reports. Finally pushing into resistance here today. I don't think like HCA. I think you can. I think that's confirmed. I don't think we've seen Darling confirmed just yet.
No, and ultimately though, kind of that discussion we had on the $300 price point, you can make that exact same distinction here on the $50 price point with this wick right here, that wick right there, that wick right there, all testing above the official breakout channel, all getting pushed back down right underneath $50. So ultimately here though, this is constructive. If you're in the trade, you're celebrating. For veterans out there, they're looking at this and saying, you got lucky because you were premature front running a potential breakout. It's got to get above $50 for ultimate confirmation for me.
I think so. I think so. And I think this might just with the options that we have on the table going into early next week, I think this might be one to kind of think about on the retracement, right? Because we kind of have bounced from 47.50 into 50 to get that break, and so maybe we get the break and then look at that next, whether it's a consolidation or retracement.
Well, that's a Cody pattern, right? A little bit of you wouldn't call this overextended coming.
No, not at all.
You do have some movement coming up into the potential breakout. You could certainly say above 50, we can move to 52, right? But what Cody and what you would say was, well, yeah, let me see that breakout and then that quick retracement to retest 50, and I'll buy the snapback flag pattern is what they would do.
Yeah, and I think we're going to want some of those, right?
Absolutely,
because eventually we're going to get that that type of development in the market. So we want to have some thoughts on that side of things. A couple that are dealing with much more significant resistance zones. One is QSR. We've looked at them again a couple of weeks ago, 2-3 weeks ago, at just approximately $60. Big battle. I mean, they've been fighting, and here we are again, right? Battling out that resistance zone yet again. Whenever this happens, I want these on my radar, right? Whether it's playing the break itself or listen, the market's told me that this is a hard line to break, right? And so if it breaks it, that's going to represent a strong signal to me. Whether or not it's that trade, I don't know.
I agree with you. When you're looking at QSR here and you're saying, okay, yeah, look at that potential break at 60, or is it 61, or is it 60.75? The problem I have with QSR is not this trend and pattern. It's or the potential breakout above these highs right there at about 61. The problem I have with the actual swing trade is it does not have a clean trigger. And there are so many breakout potentials for swing traders coming into this week that we're going to have some perfect swing trading triggers.
Yep,
There's
I'd
just
agree.
going to be some perfect swing trading triggers out there. This would not be one of them. And the reason I feel that's important, because I do think it's significant, and I'm not trying to throw cold water on QSR.
Poor QSR.
Oh, I'm not.
What'd they ever do to you?
At no point. My point is this: the significance of that trend, and look at that weekly chart. Look at that. Just look at the significance of that.
Price.
Which means if it does break out because the lack of consistency and triggering on the daily chart, and because of the strength of the weekly chart testing the significant level of that breakout channel, I like QSR as more of a longer term situation where you don't have to micromanage it and look at swing trading a little bit in other areas of the market next week.
Yeah, I think that's fair.
I do like the long term here on QSR.
Yeah, and I think that's the big point that I would like to make, because I would agree some of these other entries are just going to be easier. And let's call it what it is. This is QSR, right?
Yeah.
I mean, I'm choosing between a nice healthcare, FedEx. I mean, I've got choices, and you can't choose them all. But again, I just want to reiterate that for me, it's a big deal that it breaks. It's a good signal, I think that's exactly what Maddie's saying. And so we'll get another opportunity if it's not the break itself. And who knows? Somebody out there probably thinks this is the best one, right? And just because I don't think that doesn't mean I'm right. Only time will tell, right?
and you're absolutely right, Frankie. And I do have one rule of thumb when it comes to certain swing trading stocks. When it's a stock Mark likes to sell a naked put on, I typically don't like swing trading that stock.
So there you go. This is for Mark. When it breaks above that resistance, I'll make sure I get in touch with Mark Stead.
Yeah, when it breaks resistance, Mark's going to lob his $50 naked put.
Exactly. I like where his head's at. Very similar chart is on UNVR. Univar Solutions, very, very similar to that QSR chart, the same analysis that you're going to put in. I mean, these are, if I'm being honest, I expect some of these, that we talked about earlier to hit those entry points next week. QSR, UNVR, because these are such major. I mean, how many times do you have to fail before you? I mean, if it fails again, no one here is going to be surprised, right? If I was braver, that might be the bear that I'm looking for all I know. It's just, again, when I see stocks battling at important price zones, those are important fights, right? And I want to remember them, right? I guess is what it comes down to.
Well, yeah, and I mean, cash flow traders, and I don't approach this stock, but cash flow traders would enjoy this type of trend for a prolonged time period. But the longer it goes, look at perhaps the breakout right there at above $19, slightly above $19. You look at this on a weekly chart. It's the same analysis we had on QSR.
It's the same chart. Yeah,
right?
It's the same chart.
You see price appreciation potential there. So, but people have been looking at that for how long? They looked at it here. They looked at it here.
Exactly.
Yeah. Listen, if you need if you want to take away one thing here, the breakout's going to occur when it wants to, and not when you want it to.
Yep. And that's what I love. I mean, how hard is it to manage this in my watch list, right? An alert or a quick peek at it once a day. And for the last 2 months that it's kind of been on my radar. Not today. See you tomorrow. Not today. See you tomorrow.
You're more patient with that than a lot of people I know, Frank. I mean, talk about that for a second, because these long, like 6-month consolidations, you have a list of them all the time. I mean, this is not just for this 12/4/2020. So many times I've had discussions with you over the years. You're like, oh, take a look at this one. It's been going sideways for 6 months. I mean, is that just a watch list management function?
Yeah. I mean, it really is. Yeah. Because I mean, it doesn't take any time, right? Yeah. Once you found it, it takes me more time to actually click on the chart than it takes me to say it didn't happen today and move on with my life, right? And so it's just part of my routine. I always kind of identify any areas that I think are important, and then it's just anybody who's hung out with me, they know my charts are all messed up, right? They've got a million lines drawn on them because I want to highlight my eyes to them so I can just quickly look. Okay, it's not at a place I'm interested in today. I'm not going to debate the merits of trying to get back up there or anything like that. So it really, to me, it's very easy. If you know what you want and why you want it, then it's just a matter of taking a look and most of the time, I mean, for 6 months, I've not had these guys on my list for 6 months, but for several months now, most of the time it's just been as simple as see you tomorrow.
See you later. Yeah.
You know,
Whenever it happens, it happens. Yeah,
exactly. One of these days it will break, and then I'll have to put a little more thought into it, or it won't. Or sooner or later, this is just going to be the end of the road, right? Eventually we give up, right? Either we give up and break out, or we give up and, you know, we just don't come back again, at least for the time being. So it's gonna be a fun one. I know I like having a few things like that in my watch list, and I always like to have things in my watch list that, you know, they don't have to be ready next week, right? You know, we want a trade on Monday. You know, we don't necessarily need a trade on Monday, although we're gonna have plenty of options. All right, I got a couple more for you, Tim. Autodesk, one more breakout. ADSK. I know you know that symbol, Maddie, but now you've got that in my head, so that's how I'm gonna roll.
No, it's a habit. We all do it. I was just laughing at Valera.
I know, but now, like, I don't remember doing it every time. Maybe I did.
No,
it seems like I'm doing it more than normal.
Well, here's the problem. Now, when you point something out like that, now everybody's going to be thinking about it. So think about it. I was just
whenever we bring up like Apple and Amazon, I'm going to do that now, just to bug Matt.
Yeah.
You know?
Hey Tim, can you look at Facebook? FB, please.
FB, please.
I like this action on Autodesk here, Frank. I think it's constructive the last little bit. You took off after earnings. You're now sideways. Could it go sideways further and break? Sure. But like we've said so many times today, I don't get to decide when those things start taking off from there. I think this is constructive here for me.
Yeah, there's a breakout for everybody who wants one in the market, right? And if you don't want one, that's okay. You don't want one. But if you do want a breakout, there's all sorts of price ranges, all sorts of different sectors available.
The entire market is breaking out.
Exactly. So you're going to have something out there, unless your thing is utility stock. And then I don't know if you're going to find
with that said, Frankie, Coach Mark shows up right when we're talking about the massive breakouts in the market. He loves his breakouts.
He does love his breakouts.
Listen, I came to see Frank's charts. Are you kidding?
Oh, Frank's got some winners here.
No, I mean,
so yeah, we've been having some fun.
When someone does the work and find high quality setups for you, it makes you money. I mean, so I'm gonna, you know, of course I want to see Frank's charts.
Yeah. So appreciate it. Yeah, and a lot of them, like, we had some nice pullbacks, like on MOS and LYB over in chemicals, but they just went too crazy. They just moved too much. Yeah, it just what are you going to do, right? You can't make them not move any more than you can make them move. So, but you have an interesting on CC, Matt. And again, this might be a tougher trade to think about. And again, it depends on you, I suppose. But on CC, we've broken a really important zone, an old support, resistance. We've finally broken through it. I don't know exactly how I would trade it.
I have a question for you guys. When's the last time you saw a bullish engulfing candlestick on a breakout?
Been a bit. It's been a bit. I mean, it's in a really nice place on the chart. That's a really good candle. You absolutely right on that side of it, Maddie. A lot of room to run in this area still, as far as that goes. So this is one that, I don't know exactly how I would prep a trade on it going into like tomorrow or Monday, but I love where it's at. I really do think that it's in a very interesting location.
I'm serious, that bullish engulfing candle, you just don't see them a lot at resistance levels. You see them primarily at support bounces is when you see them.
Yeah.
Bullish engulfing candlestick patterns, in my opinion, are the highest probability pattern in candlestick analysis. Again, you typically see them here is when you typically see them, right? You don't typically see them here just because the nature of what creates a bullish engulfing candle. The nature of what creates a bullish engulfing candle is it gaps down and comes straight back up, fully encompassing the previous candle. Many times that happens on the downside. Not very often when you're threatening a breakout do you gap down pre-market and then recover enough to break out.
So fire back. Yeah, it's impressive.
It's impressive. It's almost like people had programmed orders at that 9 EMA.
Yeah, it's impressive. It's impressive action today. There's no two ways about it. What do you guys think about the developing pullback on target? Again, these guys, again, I don't know, what you're prepping for early next week, need some development, but we had that huge breakout on that nice earnings report, right? And have started a little bit of a retracement. What do you think, Tim? Is this, obviously it's hard to make something for Monday, right?
I think it's worth a watch list opportunity here. I do. Target's a weird one when it pulls back. I put it on my initial list, Frank, and then I crossed it out. If that tells you kind of where my head's at, because I like the developing nature of the pattern. I think it's fine for a watch list. If it triggers, go for it. I'm not certain if this is the one I would personally take. I wouldn't fault somebody.
Can I tell you why?
Interested in Target. Go ahead, Matt.
The reason is very simple. Nobody loves rounding tops.
Yeah.
The same way, people will love a rounding bottom, but they won't love a rounding top. And what I mean by that is, a lot of times you come up, you consolidate a couple of days, you come right back down. You have more V-shaped type analysis than you do U-shape. Target here, slow burn, consolidate, drop. Slow burn, consolidate, drop. Consolidate, drop. You don't have traditional retracements here, is what you don't have. And so you don't like it because initially what your eyes do is you see the rotation here, you see the rotation here, and you see the exact same rotation here, which means you're not looking at any retracement here or any retracement here, which means in pattern recognition, you're looking for Target to come down into here.
Yeah, you're looking at a Cody pullback, right?
You're looking at a retest of the previous resistance would be in that deeper type pullback analysis, which has not been very popular in 2020, obviously, but that's what you're looking at for specifically here on Target.
So yeah, and this would need some time. There's no two ways. Because even if you don't care about the rounding top, you still need some sort of turnaround on that intraday, right?
Yeah, I'm just saying that's what I would be looking for based on pattern recognition. It certainly can form a support level between that rising 20 and 9.
Sure, and
I would just miss it if it did it.
And that's fair. That's more than fair. Listen, I'm not choosing a retracement when I have a million breakouts. You guys know me. There ain't no way that's the choice I'm making. So
nope.
Oh, let's see. All right, one more. Why not? Why not? Because listen, I should be a pullback trader. All the things that are sitting on the 9 are just flying today.
Dude, you were a pullback trader for about 2 years until you realized that probability analysis is stronger on breakouts.
Listen, and I'm a prepper, right? I like to prepare ahead of time, and I'm a if this then that guy big time when it comes to this stuff. And so
everybody loves retracements until they don't realize how many different support levels you have to identify.
Yeah, that's true. All right, let me ask you about General Dynamics, GD. So another breakout, so nothing too fancy there. These guys, a little bit of a different location than the top of the chart, like IR and things like that. We broke back above the 200 and effectively went sideways, right? These last couple of weeks, finally starting to show a little bit of oomph, and obviously an aerospace and defense company. Could I talk anybody into playing this break?
No.
No, I'm not in. No, I think I see that. I see what you're talking about, Frankie. You got nice little consolidation. You got to break out of this short term, and I do think you can reasonably expect 160, right? I just think you're going to have very similar setups with better potential return.
Just better on the return side of things.
I do think you have a little bit of chop here to see.
Well, and it's that pivot, right? That August pivot at that 160.
If it wasn't there,
if it wasn't there, you would be a big fan of it. I would have no doubt, but it is there, right? So maybe this is one that you let somebody else buy it, let them deal with it at 160, and if it just runs, you just wish them well. And if it kind of pulls back or consolidates there, then look to play the break of that 160, working back to that other pivot, right? That pivot back in June. Is that kind of what I'm hearing?
Yeah.
Fair enough. I think that's a fair way to evaluate it.
For me, it's just simple. And I think it kind of echoes what Matt said. Just out of the ones we've already looked at today, I like other candidates a little bit better. So it would just be that part of the process.
I always like to have I like to have things that look different in my list, Tim, because there's a trade, everybody's got their favorites, right?
Everybody's got their favorites.
I know what the things I give Noah, nobody else ever really likes. So, but he likes them and he makes them work. And so, just because I don't like them, it's more about the management than the movement, right? It's more about
2,000 stocks in the market threatening the exact same breakout
Exactly.
that is
There's
happening
lots
in the
of,
market. There's something for everybody out there. There's
well,
31
and
flavors.
we
But
always have the option of choice too,
I
right?
will say this though, in our scatter reports today, you're going to have the cleanest triggers out of all of them, because because
Yep.
it's just, those are just the tie-breaking scenarios.
Let's
right?
make it easy. That should
It's going to
always
be clean. It's going to be easy.
and that should always be your goal, right? Clean, easy, repeatable. I hope when I share my charts, as a whole, I hope people can look at it and say, yep, that's a Frank chart, because I want for myself, I want that to be what my trading looks like. Always the same type of things over and over and over, right? Easy, room to work, clean entries. The easier I can make it on myself, well, the easier it is, right?
And I got to tell you, Frankie, I do believe from an outside's perspective, you've achieved that, because I know Frank charts when Frank starts bringing up charts. I mean, it's like, okay, that's the kind of thing that Frank loves. And we love hearing them. It's one of the most popular things we do on the show each and every week, because people like going through the technical analysis, looking at opportunities. It's a wonderful service you do for us each week, bringing these into the community.
It's my pleasure. Always great being here. Great to be back. After a nice little weekend. We'll do it again here in about 3 weeks, as it's Christmas time, right? It's a holiday season. It's second to earning season when I'll start to complain a little bit, but it's for different reasons, because I usually take about the second half of the month off, right? I'm not super active. And so January comes around and I have to get back to reality, and well, I'm a creature of habit, right? And so I always make sure I'm maintaining my watch list during the second half of December, because if I don't, it could be really easy for March to show up and be like, I guess I should probably start being productive again. So I always have to be careful. I'm a very much a creature of habit. That's why I believe routines are so important to me personally. They help, but they also make sure I don't get lazy, which can happen once in a while.
I agree. I love that about routines as well. One thing I did want to do before the end of the show here is talk about the news out of AT&T, as Mark popped in, and maybe this will be kind of the only news item that grabbed my attention here. But as Mark popped in, I think it's the perfect person to throw the question towards, because Mark has had opinions about movie theaters, and we've had discussions about this throughout the year. Mark, did you see the Warner Brothers news today?
Of course I did.
Yep. Basically, Warner Brothers is going to send all 17 of its 2021 movies that they were going to launch in theaters directly to streaming on the same day that it has the theatrical release, which obviously in the past, that's something that movie theaters had this time between when we would go to the theater, watch it only in the theater, then eventually we get other choices down the road. Mark, this has been a changing trend in many industries. Matt and I and Frank were talking about that before the show as well. And Matt made some of those points, but what's your read on this, and how do you think it affects, number one, AT&T, but then number two, the movie industry at large?
Well, I mean, there is that segment of the investing corner that says, oh, movie theaters are going to go the way of the Blockbuster, blah, blah, blah. I don't believe that. Haven't believed that the whole year. I still think COVID is the biggest obstacle. Warner Brothers said that this is a one-year plan. Of course, if it smashes for HBO Max, don't be surprised if that turns into a forever plan, right? Like if they go directly to HBO Max and to movie theaters.
Why not? It works for Netflix.
If they see the returns, they can say that 1 year plan all they want. Now, one thing you'll probably see in movie theaters is that they get a larger percentage of the gate. AMC has made a deal with other companies in a similar veins. The rhetoric out of all of the movie producers is that they absolutely want movie theaters to succeed and thrive and will work with them. They got to look at their bottom line as well. So it's going to be very interesting. I'm a believer in movie theaters at lower prices. They've treated me very well this year. Big hit yesterday. I'm glad I didn't own any, right? I'm glad I'm very protective on naked puts. If they go down to those lows again, I'm going to play the same thing, because I think movie theaters' biggest obstacle is not direct releases, it's still COVID. And I think we're making progress on the vaccine to get back to normal on that.
Maddie, what's your read here on this movie situation? You mentioned Netflix there. It grabbed my attention, made me, sitting here thinking for the last minute about that, because that's Netflix's model, right? Just direct releases model on movies. Yeah. So, for AT&T, I mean, do you think this could be a good thing?
I think AT&T has realized the horrific, terrible, one of the worst decisions a corporation has made in the last 10 years in embracing traditional media and Time Warner and, DirecTV and you know, I think they're looking at creative ways to reverse that decision.
I don't see a trade here personally. I think this
There's
is
never
more
a trade on
interesting.
AT&T.
Yeah, it's not a trading.
There has
trade.
never been a trade in 35 years on AT&T. It's not that type of stock.
Yeah.
Ooh, challenge accepted.
Frank will find one.
I go back in time. I get 35 years. I know what I'm doing this
No,
weekend.
my point is it's a cash flow dividend stock. That's my point.
Fair enough.
But I personally thought AT&T's decision to buy DirecTV was just an absolutely god awful decision. I thought it lacked any degree of actual vision for the company, and I think it showed the flaws within the design of AT&T, quite frankly. I like this move they made today. I do. This direct to consumer Netflix model has been a boom for Netflix, a massive win for Netflix over the last 5-6 years. And I think people are now looking at that saying, model proved out. Let's see if we can do it ourselves.
Yeah.
And by the way, what you're seeing now is just an example of a microcosm of what's happening in our economy as a whole. Post-pandemic analysis and how corporations evolve to the ever-changing consumer behavior post-pandemic is going to be something to watch in the market for the next 5 to 10 years.
Yeah, I agree with that.
And
No
quite frankly, the companies that evolve the fastest to meet the ever-changing demands of the consumer with online will be the winners over the next 5 years. So you got to celebrate AT&T's decision in the short term. Let's see if they can actually make it work in the long term.
Similar moves, obviously, this year out of Disney and other companies that have some content like this. It isn't a larger trend that's been developing. Just an interesting note there. Let's start moving into final thoughts here, guys. Been a fun, energetic show. It's a Friday, 12/4/2020. Appreciate everybody out there. The conversation, the chat has been great here today as well. Let's move into some final thoughts. Marky, as you're in here, why don't you go first? And also any events we're having here today or over the weekend that people should be aware of.
Yeah, my final thoughts, same as I've been for a while. Be responsible in your trading. Obviously, the market's bullish. It's a good stretch. It's been like the best cash flow stretch. This has been an amazing stretch. But just execute your plan. Be happy making money. Leave yourself dry powder. Just responsible trading. You have to become a millionaire today. And in an hour for pro members, I'm doing the Market Bell Show where we go over commodities. A lot to talk about Bitcoin. A lot to talk about gold, copper, oil. It's been a great environment everywhere. Commodities have in particular had a really good percentage stretch. So we're going to talk commodities. And then any last second trade ideas, any charts we look at at the Market Bell segment. And that starts in 1 hour for pro members over at tackletrading.com.
Very good. Frankie, you're up.
Well, I guess James and I are going to IPO our own personal drive-in theaters. It sounds like
I like it.
So hit James up for more information
drive-in
on
theaters,
that.
Huh?
So, but yeah, to echo what Mark said, listen, don't overthink it, right? Be responsible, stay on top of your money management, but that's always what you should be doing, right? Regardless of the market conditions, trade what you see, right? Don't overthink it. Go with the flow. Trade within your systems and rules, but when the market's cooking, eat, right? Eat.
I'm just thinking about the question James put in chat. Well, not the question, but the statement about theaters are dead. And I know there is a difference of opinion there, but I do have a tendency to agree. I think the traditional movie experience that people enjoyed when they were a kid is dead.
I think it's definitely different.
And Frankie, those theaters have tried different creative ways to evolve that over the last 10 years. They can't find anything. The Netflix model is the future of entertainment for movies.
I would agree more to that side than the theaters will make a comeback side personally.
Did James interpret Mark's statement as Frank's statement, and there was a little confusion there? Is that what
no? James and I just want to open some drive-in.
They want to open some drive-throughs. That's it.
James, I don't have to have a method to our madness.
Dude, yeah, James and Frank are gonna go hang out in a drive-through somewhere. That's all. That's all that's happening over there. Little buddy date right now.
Yep.
That's it.
We'll hire Mark to be our bouncer.
Yeah.
Maddie, final thoughts from you, sir.
Oh, I thought that was my final thought.
I thought you were bring up the Facebook page.
No, I kid. I brought it up earlier today, guys. Yesterday, you know what? One thing I want to try to do at Tackle is to increase, and we are working on things through Tackle Trading, through the social interaction of our website, and our amazing coach Christian Sisson is leading that project. But in the meantime, we want to see a little bit of interaction increase when we're not in our live shows, our coaches shows, our traders lounges, our mastermind groups, all of that. And obviously we have a lot of, original content like the step system and cash flow condors and the Tackle 25 and bear market survival guide and Tech 101. And we got all these video categories of education you can enjoy at Tackle Trading. But one thing we want to see is a little increase when we're not doing all of those things. When somebody has a question on a chart and they want to get some other eyes on that, so we want to see that. And so we decided to do a Facebook group for Tackle Trading. And so last night, Tim, myself, and Christian just started a Facebook group. Nothing too special over there. Everybody kind of knows my opinion on Facebook, so I will talk a little bit about the rules of it. But very quickly, I love Christian so much. I just love that so much. But if you're interested in it, guys, there are just a couple rules, and I wrote them down right here. So if you want to see the rules, let's have some fun. That's number one. You always got to have fun in life, guys. Number two, participate, right? Engage, ask questions, post charts, make comments, have some fun. This is something that is just standard for us at Tackle Trading and in our lives. We do not tolerate any negativity, guys. And when I say I don't like Facebook, you guys know I don't like Facebook. So if I see people being negative on Facebook towards our community, they will be banned. No second chance. 0 second chance. So 0 negativity. And this is a big one, guys. No politics. You got Facebook feeds for that stuff. You got cousins for that stuff. You got family and friends that care about that stuff. For us at Team Tackle, this is about the markets, no politics. But more than anything, guys, let's have some fun on Facebook. And like I said, post charts, make comments, use it however you want to use it. Let's just all support one another in our community, because that's what we're about. Community first.
For sure. You're going back to being the law. When Matt was in law school, we used to call him the law. That was his nickname. And, he's going back to his roots.
I will lay down the law, the hand of justice. I'll go 1860s Midwest on you, y'all. That's what I'll go. Yeah, nope. I was going down an analogy train there.
A big handlebar mustache?
I'm going to tell you right now. I am going to grow the sunny mustache, Frank, and I'm taking a picture, and that is the law of justice that is going to manage that Facebook group. and instead of us looking at this little beautiful banner Christian put up, is just going to be my face with my mustache,
a gavel and a finger point.
Yep.
When you think of the law, and you think of like movies and TV shows, is there anybody that plays a lawman better than Timothy Oliphant?
No, he's up there.
He's really good.
He's up there.
He's up there, but Sylvester Stallone, he said, "I am the law." Come on, Demolition Man. Come on, Judge Dredd. Come on, Tim. You can't beat Sly.
Come on now, though. I mean, there's some good ones.
There are some good ones. Yeah.
The best one. What's the one guy's name? He just looks like a cowboy. Like Kurt Russell? Well, yeah, Kurt Russell is amazing as a lawman. Tombstone, anybody?
So good.
Kurt Russell was awesome in Tombstone.
Tombstone.
Yeah. I don't know. I think Timothy Oliphant is the first
one.
He's great.
He's up there. He's great.
Obviously, historically, those 50s, 60s Westerns, and you've got all those guys that did it too. But yeah, those are fun shows.
I mean, have you guys seen the Crazies?
Kurt Russell? Give me Kurt Russell in Tombstone, Lawman.
Have you seen the Crazies?
Sam Elliott, James. Sam Elliott's the guy I was.
Sam Elliott's really good. That's classic.
He was in Tombstone too, Sam Elliott.
Mm-hmm.
Yeah, he's in every cowboy movie ever.
Joe Pesci as a lawman. I've seen Lethal Weapon cuts. Joe Pesci.
Nobody beats John Wayne though, right?
Listen, I think I want to go party at Cut's house. He's got look, that'd
Me
be
and
pretty
Cuts,
fun times,
man.
pretty good
Friday
times.
night Cuts, you and me, brother. We're going to be watching all things Lethal Weapon, and we might partake in some things to enjoy it a little bit more.
Lethal Weapon. What a great buddy cop show. Better than
Yeah.
Bad Boys any day of the week. All right, guys, that is our show here for a Friday. As
You thought you
always-
could just get that through, didn't you?
Yeah, nice try.
I had one comment. I had to suck down real deep, dark to put it in a place I can't talk about.
Just yep.
I had
lock
to
that one
think
up.
about that one for like 2 seconds. Like, nope, can't say that one. Let's roll.
Yeah, let's roll. All right, guys, that's it. Had a fun week, fun show here today. Frankie, thank you as always for coming in.
Pleasure. Thanks for
Enjoyed the
having me.
conversation. We've got other work we got to get done here, getting ready. We're going to go bird dog for you guys. Get ready for the weekend reports. Mark's webinar is in 1 hour, 55 minutes from now. You can get it on the events page. Other than that, guys, have a safe, wonderful weekend. We'll see you guys back here on the
Team Tackle.
Halftime Show on Monday.
Have a great weekend.